Yeah, testing one, two. Mic check one, two. Cut out the background. I was hopefully trying to make this thing go straight through, but it's all good. We're gonna give it to you rough, rugged, and raw. Ha ha! It is me. It is I, says he. Reginald Rothschild. Some call me Bid God. Yes, definitely Bid God. Others call me Don Wick. Don Wick in this bitch. Yep. Annihilating the charlatans. Yeah, I see you, Charlene. I see you. Coming right for you, right for the kisser, as well as the bucket shots. Yeah, we're gonna take the retail traders out of the bucket. So, without further ado, this is Chart Illusions. Now, I've got some notes. I can't find the notes, so I guess it's gonna be fuck the notes. We're gonna come straight off the dome. Rough, rugged, and raw. Let me make sure I got my Pepsi. And here we go. So, for starters, this is a new content. This content we like to call it the Alert Trader series. The market traps. In order to understand the market's traps, you got to be able to see the market's map. That's the lay of the land. Once you've got the true lay of the land, then you can watch out the landmines. And then you can grow that dollar sign. You can grow the account, that's for sure. So, this one here, why 90% of traders lose before they even click buy? I mean, so before you even enter the trade, you're already at a disadvantage. So think about this. Let's let's get something straight here, because there's a lot of confusion. The blind leading the blind, which is why you're all behind. So understand that you're not trading the markets. Okay, this is why I say chart illusions. When you're trading CFDs with shady bucket shop offshore brokers that leave you broker. No, please leave. Hear me out. Hear me out. Hear me out. I think they created the term broker because when you're done, they leave you broker. Yeah, yeah, that's for sure. And why? Mainly because your chart is fake. You're trading inside a simulation built to drain your account before you even click buy. Yep, ain't that the truth? So I want you to think about this. Imagine a dream, a fallacy, a simulation. It might as well be just like demo trading, if you will. And I'm speaking mainly for the CFDs, right? The synthetic price action, the synthetic assets, okay? The XAUUSD instead of GC, right? Gold contract futures, right? Or you can even go in the equities market and go with an ETF, which is GLD. The point is you've got regulated pricing, okay? Instead, when you're dealing with these bucket shops, every candle, every single candlestick you see, every price move you see is a mirage, a facade. It's like the Lambo never leaving the garage. Yes, 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 yes. So it's a digital replica. A dealer feed dressed up as Wall Street trades, right? Right? Dealer feed. Fake, fake, fake. Alert. Fake chart. You got that? So I want you to think. Think for a second. If I'm talking smart money concepts, you talk about the like ICT concepts, which are not ICT. It's really smart money. I agree with smart money concepts. The only thing happening inside that inner circle of traders is losing and drawdowns, right? Yeah, yeah, yeah. Real traders trade in real markets through futures commission merchants, through clearinghouses. Heck, you're paying exchange fees and data feeds to get real data, not distorted fake charts. So it's dressed up, much like my grandma's salad dressing. A little stuffing filler in there, and you think you're full, but it's just carbos, right? So the dealer feed dressed up as Wall Street charts where you think you're analyzing supply and demand, but you're the food, you're the feed, you're the demand. You're actually just reacting to an illusion, if you will. They can widen the spread, delay your fills, play both sides of the trade. Oh, it gets wicked. It gets really, really wicked. So, as we dig a little deeper, right, there They're showing you price reflections. It's not the market. You can even look at it and try to look at volume at the bottom of the charts, and the volume's not even going to be accurate because we're talking about a decentralized market. Okay, if the market's decentralized, then that means that there is no centralized clearing hub, no centralized clearing exchange. Therefore, you are the product, right? Free charts equals free lunch. Yes, for the broker, if you will. Yes. So if you're watching this, congratulations. Yes, you've already felt something was off. You felt something was suspicious, something was odd. You knew deep down something didn't add up. And it wasn't just the profits not adding up in your account, but just the picture itself, right? Hear me out. You weren't wrong. The chart was wrong, but you weren't wrong. Good tip here. If you put together the real underlying asset next to the fake synthetic chart, you can immediately see some of the issues. You can see some of the apparent glaring holes. So just by knowing for a lot of the traders out there, retail traders trading in the forex industry specifically, and even in futures, but really this happens mainly in forex and crypto. You're looking at charts that are mainly going to be CFDs, contracts for difference. So you're not trading the market, you're trading your broker. So they're offering you a contract and they take the difference. You win, they lose. You lose, they win. And here's the kicker. If you keep winning and taking money out that broker's bucket, out that broker's liquidity pool, do you think they're going to let you stick around? It's bad for business for them. So this is when you typically start getting slipped and chipped by these brokers that very much like Jesse Livermore, Boyd Plunger. Back in his day, he'd go to the bucket shops, which were easier to spot back then. Now they hide behind fancy educators and charlatans that are pushing these brokers as their trusted broker, hoping that you hop on board, start trading, and they make money off the IB contract and IB relationship. But I mean, it's a conflict of interest. So this is why we created Chart Illusions. Welcome to Chart Illusions. Let's kill the simulation. Okay. So when we understand that when I say the chart is fake, price is being manipulated. They're padding price action. This means that they're adding a price on the ask, right? Increasing the ask, right? And then lowering the bid. Okay. So in that, they're taking the profit from the difference. So if I'm buying, they're going to push the ask up so that you end up paying more. When I'm selling to the bid, they're gonna take the bid and adjust that as well. Okay, they're gonna lower that a bit so that they can make profit off the difference. And it's even more shady when they're padding. That means adding to the bid or subtracting from the ask. Okay, it's quite natural when you're going in to see the broker increase or widen the spread due to there being a lack of liquidity in the market. But in this scenario, when you see spread padding or just widening the spread in general, a lot of times there can be manipulation where they're using it to take you out of the trade when not necessarily a market has moved past the stop loss threshold, but maybe the spread widening has gotten you kicked out of the trade. So when we say your chart's fake, you're not trading. You're being traded. Your brokers built the chart, not the market. So there's no correlation. So again, you are the feed. You are the lunch. You are the fee. And it goes beyond the fees. Think about it. Why do you think they say zero commissions, folks? You think they just want to trade for free? They are in business to make no money. Again, you are the fee. And it even goes deeper. They're making money off your losses. They're on the other side of your trade. An honest market is when they're putting you to the market. That means I'm taking a trade against somebody who's either hedging or wants to take the other side. I'm buying, they're selling. They're selling, I'm buying. But when I'm buying and the broker's selling and vice versa, it's a conflict of interest. And again, you become the lunch. You become the liquidity. I have the saying in the market, you're either liquid or liquidity. Let's say it again. Liquid or liquidity. Liquid or liquidity. If you're not liquid, you're squid. Okay? Might as well be Squid Games, right? You are the target. So when there's no exchange, no centralized exchange, there's a lot of room for price manipulation. And you see it a lot. I'm not going to name any particular names because we don't want this to be directed or attacking any particular company or individual, but just know that there is a simulated market out there, and then you have the real market. How do you know when you're trading the real market? Well, you can see level 2 data. There's going to be an exchange fee, and there's going to be one exchange or a clearinghouse where they have their own internal quote, and you can't manipulate that price. So when you think that you're seeing price action, you're seeing price fiction. And this is where you'll start to see those faulty candlesticks and the faulty rig charts where they're glitching. And all of a sudden you come back and that glitch is gone because they've adjusted and smoothed out the price data. I mean, there's rampant manipulation going on. Wouldn't call it complete fraud because they're providing a market where a lot of traders wouldn't even have access to the market. The Forex market does allow you to get in, and same with crypto, and trade with no data fees. It allows you to get in and be able to trade with, again, cheaper commissions, but the spread is built into the commission. So, like a good example, if the spread goes from two pips to 100 pips, and I'm trading during FOMC or non-farm payroll, then I'm out of there. You say we were like umpires. You're out. Yeah, you're struck out. The broker is pretty much the one making most of the money. So you did all the work. They just take all the profit. So there's a hidden tax on every trade, right? Think about it. If I'm trading in, the equities market, the broker's commissions from brokers like Interactive Brokers, TD Ameritrade, it's clear. They're not cutthroat. They're telling you they're charging a couple of dollars per trade or 99 cents per side, going in and out. If you go into traders like a broker like Ninja Trader Brokers, right, where you're really gonna be a sniper, a true ninja, they're even better. For people with smaller account sizes, they got lower margin requirements, which kind of leaves you to sit there and have to ponder, why would a trader stick to Forex in an unregulated, decentralized market where you're getting filled at a disadvantage? So that means, let's say I'm getting in where price is at $100. They could be adding 75 cents to a dollar, on each trade. All right, if they're adding that much in padding and spread, think about it. I mean, how much over the long run they're actually profiting? After 100 trades, that's $75. After 1,000 trades, we're talking $750. This stuff really, really adds up. So from a standpoint of a new trader coming in and getting free data, that's fine. Maybe you're trading demo, that's fine. When you know you're trading demo and it's sim funds. But once you actually start to going live and trading live, you got to be mindful of the spread padding and the slippage and the manipulation. So therefore, that extra 75 cents per trade really, really starts to add up. So the broker's feeds don't equate to market feeds. They're unequivalent to market feeds. They're their own playground, if you will. It's the broker's simulation. So again, there's no clearing, no exchange, just their quotes. And if it's their quotes, it's your ass. Their quotes equals your ass, because your ass is on the line. Okay, your assets. You understand that there, right? And if you want to protect your assets, then that means you should know if you're getting the NBBO prize. Now, a lot of you probably don't even know what NBBO means. That's Nancy, Brenda, Bob, Oscar. You got that, right? National best bid offer. Okay, you got that, NBBO. So in order for me to make sure that I'm getting the right price, it's got to be the national best bid offer. And that only comes from clearing firms. So the chart you trust is nothing more than a stock photo of price action. My bad to laugh, but I mean, it's good now. You're getting the information, you're getting the game. But for those of you that didn't know, it's almost like trying to drive your Lambo blind, driving the Lambo with one of those little shade blockers in the windshield. Can't see nothing. Okay, so you're making real trades in a fake market. Let me say that again. You're taking real trades. They're just not in the market where the pros reside. You're not in the real market. You're inside a simulation. You're inside the broker's bucket. You're inside the liquidity pool. So the broker makes you broker. I'll say it again. The broker makes you broker because the charts are broken. The broker makes you broker because the charts are broker. I like that one. Let that one go viral right there. So there's a hidden tax in every trade. What about the fill delay trap? Click buy, and all of a sudden it's just waiting to get filled and waiting to get filled. I can understand if there's no open interest. I can understand if I look at the level 2 data and I see no opposing orders at that side. In order for a trade to get hit, it must be a limit order meeting a market order. And when the two sides meet, the buyer and the seller come together, it's like peanut butter and jelly. Yeah. But when you aren't trading in the real market, the brokers can play around with the spread. I mean, I've had it where I do what we call pennying. That means you keep on adjusting your orders, you keep on adjusting your price and your size so that you can get filled. So I may chop an order up because it's not getting hit in the order book. If I got 100 contracts, I probably am not going to get filled on 100 straight. So I might want to chop them down 10, 10, 10, 10, 10. And if I'm not getting filled at 10, then I may chop them down 5, 5, 5. You know, a couple of 10s here, some 5s there. But for the most part, I'm seeing what's in the order book and I'm making sure that I'm meeting the market where the market is at. Okay, I'm not bringing unrealistic expectations, right? So if the chart says 100 and you get filled at 175, that 75 cents coming out of your pocket. It doesn't matter what it's showing or saying on level 2 data because that level 2 data a lot of times is not there, especially when you're talking about the centralized market where there is no centralized order book or a centralized exchange. Okay, very, very, very important. We understand that there. So the fill delay makes it even worse when you're adding the spread padding and then they're delaying the fill. Think about it like this. Look, click buy, price hits the level, but nothing gets filled. You ever notice that? And it be them good trades too. It be them ones. It be the one where you have your edge there. Great risk to reward ratio. You're at an extreme on the chart, like buying at the low of the chart or selling up at the high of the chart. I mean, you licking your chops like Tasmanian devil. Blah, 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 blah. It looks good. It looks delicious, like a nice juicy steak, only for you not to get filled. Woo! Man, oh man. So again, or if you do get filled, you get a horrible price fill. You get the worst fill. I'm the man. I know you're sitting back like, where are the trading guys when I need them most? You're not trading in the real market, you're trading in a simulation. And the easiest way to tell folks is the ticker. The fake simulations would be SPX 500 instead of SPX or SPY. Heck, if those are too big, you can go XSP. Or, I love this one. NAS 100. Yet that's the fake chart, folks. The real one is NQ. Yeah. NQ in futures market, right? Or QQQ. That's another one. You want to go smaller, do TQQQ. And going back to S&P, ES. ES. Yes. Yes. That's the futures contract. Gold? No, not XAUUSD. These are fake charts. They're synthetic charts. These are the brokers' manipulated charts where they can manipulate the price feed. And I know if you put them side by side to the actual, the gold futures contract or the S&P futures contract or NASDAQ or Dow, they're going to look almost identical. But looks can be deceiving. I'll tell you that much. You put me next to a lot of charlatans, and hey, we look the same, right? On the outer appearance, the difference is I make money from the markets. They make money off the markets. Ah, you get that? There's a difference between making money from the markets and making money off the markets. Yeah. It's funny, but someone has to expose it. Someone's got to do it. This is a truth bomb. Okay, the market trap series, and in order to be an alert trader, okay, you're gonna have to be able to spot the traps. Be wise of the traps. We've got a lot of tools and resources here at AskBid that we're going to be dropping to you. That are going to be able to help you become what we call an alert trader. We're starting a 10 series mini course. The 10 series mini course is the alert trader course, avoiding the market's traps, all right, and market manipulation. So, why would the brokers even want to play games like this and give you a field delay trap or give you a platform that is sufficient or deficient of the actual tools you need, like your level 2 data, your volume profiles, and et cetera. And I know you see a lot of the CFDs with the Forex brokers in the Forex market where they got volume at the bottom of the chart, but that volume is only volume depicting the broker's volume. It's not the actual volume from the actual markets. Okay, so the actual markets, when you have them from a clearing firm, there is no conflict of interest. They're just providing a market. They're meeting buy orders with sell orders. So if you trade with the bucket shops, your edge is gone before the trade starts. This is why I said in the title of the video, why 90% of traders fail before they even enter buy or even hit sell. You're trading a synthetic price chart. You're trading a mirage. It's a facade. It's a mirage facade. So we call it garbage. Yes, garbage. In order for you to get out of the trash, you got to stop trading trash. You want to avoid the mirage, facade, garbage, and just go to the real markets. Go to where you've got centralized data. Centralized prices where there's an actual price quote. Decentralized markets have spot prices where you got to check the price against others. But how can you do that when you're taking signals from a charlatan? That means the signal's already delayed. Now, how are you going to check that against 3 or 4 other price feeds when you are rushing into the signal? Newsflash! A lot of you are more educated and better traders than the educator. Yes. A lot of you do more trading than your favorite trader. Okay? That's because a lot of them don't trade. So, think about it. You're taking these trades, you're talking about smart money concepts, trading supply and demand, liquidity gaps. It's all cap. Yeah, why is cap? No, not smart money. Smart money is not cap. Liquidity gaps aren't cap. Supply and demand is a cap. These strategies actually do work. It's when they're applied in the real markets. But how can I trade smart money in a decentralized market where there is no centralized price feed? There is no centralized order book. There is no depth of market. There is no volume profile. Okay? There is no volume footprint. So if you can't see level 2 data, then you're trading blind. Real traders see a full order book depth. They'll get the dome. That DOM, the dome, that depth of market. Yeah. Without it, you're up shit's creek without a paddle. And that paddle pretty soon will be spanking that ass. Those assets. You want to have assets, you got to make sure your ass is set. How do you do that? Why do you think they call it asset? You can't have assets until your ass is set. You got to know what the traps are and how to avoid them. When you see the landscape, you avoid the landmines. So, also, real traders see real-time bid-ask levels. Okay? They're able to see the institutional order flow and true market liquidity. They get time and sales. All of this is just beautiful beauty. It creates chart art instead of the illusions that you see, where it's just candles and fake volume and no depth information, no order book visibility, and no institutional clues. So how could you trade institutional levels with no institutional clues? Yeah, I had to give it to you like that. I had to talk like one of the weirdos. We don't want to use the words to get demonetized. So the R's. Yeah, yeah. How can you see smart money when your money isn't smart? When your chart isn't smart? You don't have any level 2 data. And without level 2 data and with fake volume, you might as well be trading blind. You're better off taking a dart and throwing it at the board. And when it lands on red, you buy. Ha! And it lands on green, you sell. I know that's a little backwards, and that comes from me understanding that everything in the markets are backwards. In order for you to profit, you got to be on the opposite side of what they're expecting you to do. If you don't know what side the banks are on, you're on the wrong side. And a lot of times, oftentimes, your liquidity. I said it and I'll say it again. You're either liquid or liquidity. So there's no visible order book, no level 2 data, which leaves you at a disadvantage, which gives you no edge. The brokers basically control what you see. So it looks real, but isn't real. So again, you can try to apply logic to simulation. And again, I'll say it, smart money concepts work, but they're based on real liquidity. Okay? But your broker is the market when you're trading a CFD, when you're trading with retail Forex brokers, and in some crypto instances too. Okay? You're holding your crypto with the centralized exchange in that instance, then it's all bad. Okay? You want to have your crypto stay decentralized and in your possession, where you're taking custody. But when there is no institutional order flow, okay, no interbank liquidity or real order blocks, just synthetic candles, smart money concepts are null and void. You got fake volume bars, meaning the volume is not generated from the actual real market participants, but from the broker, if you will. You're not trading smart money. No depth of market information. Again, you're not trading smart money. So logic fails on fiction. When you're applying real market analysis to a simulation controlled by your broker or by a broker dealer, then it's the quickest way to go broke or to blow your account up. So the strategy only works on real markets, not on a simulation. So can you spot the difference? This is actual, do a picture for you. So free charge, free lunch. And when it's a free lunch, it's not free. Typically, you're the food. You're either liquid or liquidity. You kind of get that there. You either have the liquid or you are the liquid, right? You either have the liquid or you are the liquidity. And if you don't know whether you're the liquidity or not, then a lot of times you probably are the liquidity. And to make it even worse, they're not even bringing you to the liquid markets. They're leaving you in the broker's bucket, the broker's pool. So real charts are exchange backed. They got real-time depth of book, institutional liquidity, transparent pricing where it's the same across the board, and then level 2 is available. Fake charts, it's a broker-generated feed, not the real market. You got to be quicker than that kind of scenario where always close but no cigar. Synthetic liquidity, hidden spreads, and it's the dealer's discretion. And all too often, if you start being successful, you get slipped and chipped. I like to call it slipped and chipped. Chipped means they just pretty much take the other side or widen the spread. Take you out while they're taking the other side. They widen the spread, boom. Your loss is their gain. So how do you avoid this? Because obviously they don't want you to win, right? In fact, they really don't even need you to win. It's so rigged. All you gotta do is just trade. The OTC, the over-the-counter markets, the over-the-counter brokers, they profit from your activity, okay? Not on your success. This is why Charlene, the charlatan, all these charlatans and clowns out there, they pitch and promote scalping and high frequency day trading because you're taking several trades. But it's also almost impossible to follow if it's a signal because that signal can get stale very fast. So stop trading setups in a market that doesn't exist. It's relevant. They're taking the other side of the trade. Every tick, every pip is engineered, and they're profiting from your presence. So before you enter the market, okay, check to see where the broker actually clears your trades. Check to see, whether or not they're actually sending you to the actual market. If it's Forex, they should be sending you to the interbank market. If it's futures, then it's very easy because you can see a centralized exchange. Check the exchange clearing. It's going to be very, very important. Okay. And then demand level 2 data. And if they don't have level 2 data, then you should probably be moving on. A lot of traders say, okay, how about if I look at level 2 data, I look at futures. If I'm trading XAU USD, I can look at gold, right? GC futures, right? If I'm trading SPX 500 on a CFD broker, I can look at ES futures and get a true depiction by looking at level 2 data. But that doesn't work either because they're manipulating the markets. You start doing too well, you don't get filled. Or you find yourself being stopped out when the market probably necessarily hasn't really gone to that particular level or those lengths to stop you out, right? And avoid B book dealers. B book means they take the other side of the trade. So it becomes a conflict of interest, okay? So all of this and more is what we go over in our Discord. Our Discord community is growing. Discord is a place where traders flock, and this is where we can actually share a lot of information and not really have to worry about a lot of the noise out there that's online in terms of this person saying this person saying that. It's easy to get distracted when you're on YouTube and you see this guru and this charlatan and Charlene screaming here with this chart, and I mean it could be a lot of noise. So in the Discord, we go over a lot. We actually also give you resources and different tools, and this market expose, where we're exposing the market manipulation, and going even deeper into the Alert Trader series. We do a deep dive inside the Discord. You also have access when we do live stream, live sessions. But for now, you know who it is I, the kid, Mr. Wall Street, always doing it big as Bid God, Don Wick, and I'm out of this bitch.